S&P rockets to new highs on CPI data. Nasdaq has a new closing high after basing for 3 weeks. The SOX quietly breaks out of its pendant. CVNA continues to squeeze shorts, but there's some signs of a topping. We're going to walk through that. What Bitcoin's move today is telling us. Crude oil continues to push. We'll talk about which stocks should benefit the most. Nvidia closes at all-time highs and is making a new high after hours. We have a lot to go over. Let's get to it. Hey everybody, welcome back. We have a lot to go over. First and foremost, start with the basics. You have the ES or S&P futures. We finally closed above that 4,500. Now, we were monitoring this for some time, and you can see how this became an absolute battleground. But as all good battlegrounds, decisions are finally made, and you can see right here and here how that 4,500 just kind of held in there until we flipped, and that's exactly what you want to see. This now becomes a minor support level. We are flipping it, and we want to watch how that plays out. Huge volume today. It's very hard to not see that volume. It was consistent all throughout the day. Numbers came in a little bit lower than expected, especially in one area, which we will go over. Now, Nasdaq was a little bit different, and we're going to start with the hourly and just zoom in here for a moment. You can see we were unable to make that new higher high. Now, that doesn't mean that we're not going to make it. It just means we didn't make it right now. You can see that here, that level, that 15,478 is really what we're looking at. Numbers are always over here. Black line will tell you the number, and this will show you exactly where we closed. And you can see that battle going on right there. Pretty historic levels as far as moving. Nothing's changing. I will just tell you that you're going through some things where you have to look at, RSI is something that I look at, and when I get over 70 and then back under 70 like we're doing right here, I just pay attention. I need to pay attention to that. It doesn't always mark a top. It just means that it's an area of interest to me that I want to pay attention. For example, it marked nothing here, and if I acted on that, I had a bad day or a bad couple days as I got out of the way. So you always want to make sure of that. There's no be-all, end-all indicator, but it does give you a guide on what's going on. If you're bumping a resistance area like you're doing in here, and as you're hitting that resistance, you're going to want to focus on that and say, okay, well, is there something else that I could be focused on? Now, just to spend a second here and drill into a 4-hour chart, take this line and go all the way across here. You're going to see this level that we are trying to flip and fighting. And this is usually what happens with these kinds of key levels. We go back to 2022. And what happens is you'll break over them. And then after you break over them, you'll do some kind of retest. So you can see the original break there. Then you have that failure, and then you try again. But then what do? You get that lower, or that higher low rather. And that's really what you want to focus on. Once you have a system like this and you can look at this, well, now you can drill into that and you can make a more informed decision. And I'll explain. We know that this is over here. We know that that's a key level, that 15,287. We've gone on over that level ad nauseum. But now that we know that, we can take this on the 4-hour and just blow it up for a second and drill into it and go, okay, well, what's going on here? Well, we have a trend line, pretty obvious. And then we have a top here that we've been unable to get through. And now we can see that we're wedged in here. Now we have a level that we can work off of. We can really work off of that 15.5 level and just wait and see, okay, we have to see how that goes tomorrow. Now you have PPI tomorrow. PPI is usually lower if CPI is lower. PPI is how producers pay for goods. That's what a producer pays for good, PPI. Okay, corporations pay for goods. CPI is what we pay for goods. So think about it. There's no way that a company is going to pay more and not pass those costs on. If you think about it that way, it makes a lot of sense. I'm just going to drill into this for a weekly for a second. I'm going to point out the obvious. If you look here, you can see how this RSI is way, way over. But we could stay like that for months. We could stay up here for months before that starts to roll. But we need to be aware of that. Now, the reason I'm showing you the weekly is because if you zoom in on this, you should be able to see that you're setting up to break out. You can see this, right? You undercut here, shook everybody out, and then ripped on the futures market. Now you have that level that we were just talking about, but now you can see how that level sets up. You could even suggest that this whole part of it right here that's been going on for 4 weeks is a flagpole. And you could even suggest that this here is a high tight flag or a pendant, because you're kind of angled. Either way, it's there, it's glaring, and we're just getting started. And tomorrow we have what? PPI after coming through CPI. And CPI was good. It was predicted to be good, but it was substantially better than we thought, and I'll show you why. This is just a very simple article. I believe it is by TD Ameritrade. And they just really highlight the part that I want to really hammer home here. which is just the CPI number. June CPI reported was better than expected across the board. Core inflation slid. This is important. Core inflation slid to 4.8% from the prior 5.3%. When analysts had expected 5% or above. Core CPI came in lower than expected. Not only lower than the 5%, but lower than the previous month of 5.3. The core data has been stickier than the headline. Okay, core, food and energy. Okay, core is X, food and energy. Keep that in mind. That means that it's dropping even more than we had anticipated. That is one of the reasons why we saw stocks continue to move higher, because the sticky inflation came down substantially more and has broken to this 4.8 level, which we have not been able to break for about 2 years now. Now let's look at the futures market so we can talk about exactly what happened here and why this is significant. Once that number was released and digested, S&P rocketed, never looked back. You have that 4463 level, 4483 level, I apologize, and you never, from there, you never came back. You never even tested it. And that's a very important distinction. I want to get into another distinction here that I thought was really significant. If we go and take a look at this level right here, this 4500, you have a test, another test, another test. Right? You're constantly testing that level. And I'm just going to drill into this on the day so you can see. That's all you did was test that level over and over again. You're testing it here. You're testing it in the pre-market. You're testing it towards the end of the day. You couldn't even get down there. Now, I see this as well, and I'll point it out, but I'm sure that everybody sees this. So, yeah, I'm sure that you had profit taking during the day. Some people are not going to want to risk PPI. They're going to say, why take the risk? I'll wait for PPI to come out. It's usually lower. Now, what got me about CPI and one of the concerns I had was crude oil. So if you followed me for a while on here, one of the core things that I go over is I will look at crude oil month over month as a CPI gauge. And it's a rough gauge, but at least lets me know where we're at, because oil is in everything, transportation. And what happened here was this was the first month that I was actually up month over month. If I look at oil and just marked off all these days from January into February, every single time you were down month over month in oil. This was the first one we were actually up. And it was not reflective at all in the CPI number. It was like a non-event, quite frankly. But this was interesting, and this gave me a little bit of pause. Now, you're starting to see crude break out here. There's a lot of reasons for this. There's speculation about the strategic petroleum reserve being so dilapidated, or depleted rather. I'm not really sure what the major reason is for it. We're talking about rig count. We're seeing a lot of people come out and raise their estimate on oil, talking about increased demand now out of China. There's a lot of moving parts to it, and quite frankly, I'm not an expert with crude oil. All I'm going to do is look at the chart and see what's going on. Now, if I take a moment and just drill into this, I can see that my RSI has been curling up substantially. Volume's starting to turn a little greener over here, and we're starting to break out of some key areas. So I always want to pay attention to that when these start to revert, start breaking out. So what would I do with crude? I would look at the ones that are moving, and the majority of those names are going to be like your SLB. Usually when I start moving like this, it's not a one-day event. It's not 1 day or 2 days or 3 days where you see this kind of volume and then it comes in. These are usually theme names. And what I mean by that is there's usually something that just drives it higher. There's usually something that will continue to drive it higher, or something that will drive it lower. And you should be able to see these themes in here pretty clearly, where you either are dropping because you're not having any real development, or you're going to start having development, and you're going to start seeing them move. But we're starting to see some of these names move, like Schlumberger. We were watching Rig the other day, and we saw that break out. And we can see that breaking out over here at 8. So these names are moving. The other names that I am looking at are some of these land and oil trusts. So this TPL, you're starting to see this curl up. This looks to me like we're starting to bottom a little bit here after coming down. So I'm starting to look at these a little bit longer term. If you've been following this channel for a while, you remember we bought this at 4 way back here, and then just rode it all the way up. Quite frankly, we did real well with this trade. And it looks to me like maybe we're setting up again when I start looking at this divergence on the RSI. I mean, this takes a long time to move. because the dividends have to increase, and everybody knows the game with these, but you need that dividend to increase. But it looks like we might be starting that again. So these are definitely names that are on the radar that I want to pay attention to, that quite frankly have absolutely nothing to do with technology. And it's not a bad thing to start looking outside the box. So we have PPI tomorrow. We're aware of that. We're aware of what's going on with the Nasdaq. We're aware of what's going on with the S&P and oil, and what names I would focus on there. I think it's important to take a moment and talk about just semiconductors. Now, if I look at this volume reading here, you can see that I'm over all my lines today. I haven't been over all my lines for about a month, and we saw that breakout today, and we're seeing some of these names break out. Now, if I look at the stocks, we had to hold that 500. And if you come here, you can see this level really clearly. And you had this pendant. Well, you broke out of that pendant. No matter how you look at it, you broke out of that pendant, and this close here is really important, 514. Well, the previous closest was 511, and then you come here and you have a 516 high and a 516 or a 517 high and a 516.50 close. So you're near all-time high closes on the year, and you're breaking out of this pendant, and you have major drivers that are moving now. Not only do you have the big guys that are moving, the NVIDIAs, which is up $15, and I believe it was up even more after hours. Let's see how we're doing after hours at the time of this and see if it's actually still trading up or not. Yep, you're still up about another buck. But what we're seeing, this is setting up, guys. I mean, we can say anything we want, but that's setting up. Now, I just have a simple 9 in here. I'll throw in the 12, the 22. Okay, this is where you should have broken down. Instead, you just held that 22 and you rode that. This is a 12, 22, and 55 for those that are newer. That's what I use. So here's our level. There's your reversal. Right, the 12 comes back, slices it, makes you reevaluate your life, and then you start rallying up again, breaking out, and you can see that breakout right there. Okay, so then you come here and you look at that close 439.90. Where'd we close? 439. Okay, you're 90 cents off that close. You're breaking out. So this is something we've been playing in the community for some time. The most recent ad, we traded a lot today, but the most recent ad I think was like low 400s. I have to go back and take a look. The point I'm getting here is I'm trying to get up and in this and stay in it. And it's been kind of wild, because from that 370 to 440, that's very tough for most people to ride and deal with, and have that level of conviction. And that's one of the things that happens in these kinds of market when you don't have $1.7 trillion behind you. You're going to see volatility. But this is setting up, and I think that there's an important note today. And I want to say this, one of the things I always talk about is, I always talk about this, you're going to get a drawing. I always talk about this stool, and the thing about the stool is that there's 3 legs to it. Right? You have that macro, you have the fundamentals right here, okay? And then you have your technical analysis. Okay, so just bear with my childlike drawing. And so you look at the macro and you have CPI, and you can see how CPI affects the market. Well, Goldman's out today saying that fundamentally they're going to have to raise numbers. They're going to have upward revisions next quarter. Now, this is why it's so important to understand that. Okay, the reason, what is the catalyst? Why did we move today? Was it CPI, or is it Goldman telling their institutional clients that they're going to have to raise numbers? All right, which is a really gutsy call to make. Really gutsy call to make, way ahead, because you're a while out before earnings. So now you have to go and take a look at it. Let's go take a look at events, click on the earnings, and you'll see what I'm getting at here. So this is a pretty gutsy call to say, hey, I know that earnings aren't coming out till Wednesday, August 23rd, but we're probably going to have to revise higher. So what in the world are their channel checks showing? What are they seeing if they're already making that statement? And that's what institutional clients looked at today. I think that's one of the reasons that it moved. So technically we're breaking out, but fundamentally they're talking about upward revisions. They could always be wrong, but when I got that information this morning, it let me know to trade off of it. And I do a ton of fundamental research. I just quite frankly don't talk about it here. But if you take a look at AVGO and you start looking at these names, this is setting up as well. Are we going to break out? We have a new closing high right here, but you have this VMware, and it looks like they're going to be able to buy VMware. Now, I looked at the terms of this deal. The issue that I have with AVGO and getting involved with it is a couple things. Number one, when you start looking at AVGO and you understand that they're going to buy VMware, well, they could just short AVGO and go long VMware, and that would put pressure on AVGO. They don't seem to be doing that trade. And I'm not entirely sure why we're not seeing more of that. But to me, this VMware, it looks like it's getting ready to set up to lift. Now, the other thing that we're seeing, and we should talk about this, you're seeing tons of undercuts, masterful undercuts, where they're just taking stock and then they're just ripping things. And I'm going to give you an example. Here we are with RIVN, and you can see how they undercut that doji there, and that would get everybody out. You'd flush on that. If you were in here waiting for the inside days, you flush out of it. What's it do? Open, flushes, takes out the lower low, flushes everybody out, and then it rips and closes above the high. And now you have a new closing high on RIVN. Okay, that's the kind of games you have going on right now. And this is a very different market and a very different trading market than most people are used to, because they haven't had to deal with this kind of volatility for about 12 years. So now that you have to deal with it, just be aware that these games are going to play. The best way to handle them is honor your process and just realize that you can always get back in a name. You can always get back in, and this is acting exceptionally well. It's one that we've been trading in the room for a while now and doing pretty well with it. So I like this name and I like the space. If I take a look at Tesla couldn't really get out of its own way here and still having some issues. And we ran to a key level. I didn't really want to short today. It wasn't really on my radar, but this was our level if we were going to, and I'm going to clean all this off. But that was our level if we were going to short. It opened, in this area, and I just didn't really have any interest in trying to get up and in there to put this short on. It just didn't really appeal to me. But when you start to see those kinds of levels, we popped up over here. But when you start seeing those kinds of levels, let's drill into this on a 1 minute so you can see it. Get rid of this pre and post. You have to make some decisions like, do you want to be involved or do you not want to be involved? So you can see up here on a 1 minute chart, couldn't even really get up there, and then you just kept making the lows, and then you closed near the low of the day. So these are not the names that I'd be interested in. I'd be interested in names that closed near the high of the day that had a lot of volume coming in. I would not be that interested in this, and you can kind of see how it's acting here. So I'm not really sure why we're acting this way. All I know is that we are. Let's squeeze these down a little bit. And what I would suggest is just focus on the ones that are working. And right now, maybe they're worried about that he's going to have some issues with threads. I don't know. You never know the reason why this is acting the way that it is. All I can tell you is that you have a gap here that you could still fill if you crack here. And then if you break that, now we're back to this level. And maybe this holds and maybe it doesn't. But that's there. And that's definitely something that we have to pay attention to. So all I see is dumping at the beginning of the day, then we rally mid-afternoon, and then we dump at the end of the day. So I would not be chasing this round. I'd just be sitting on my hands. CVNA, I do want to go over because I think this is really important for people to get this concept. Now, this is something that we've been trading for a while in the room. I like it, but I am noticing something, and I think that people should just be aware of this. Let's take the earnings out for a moment. And I don't really need the vol, but we're going to leave it in. And all I want to do is just point out something. So you've been moving for about a couple weeks now. We've had some decent moves associated here, and you'll see the same pattern over and over again. And I'm a pattern trader. I look for patterns, and then I look for anomalies within those patterns to tell me what's going to change. Right? Just the way that I work. And I just want to point out a couple things. So see this doji right here, and then you see how this RSI right here was over 70 and then broke below it. That marked the top. You come to here, see that 70 right here, and then you broke that 70, closed below it, and you have a mark right here. You even have a mini one right here as well, where it did the same exact thing and then came down. It doesn't mean that you're going to break down and you're never coming back. It does mean that you're probably going to digest the move. So I have it here, and I have it once. I have a mini one here, and I have another one here where we've gone from that 30 level all the way back down to 24. I don't know many people that are going to want to go for that ride in a name like this. And now you can see that huge wick standing right there, and then you can see right here that we're starting to roll again. I would pay attention to that. That's the first thing that stood out to me. The second thing that stood out to me is this is pretty big volume. That's pretty huge volume today that we had. And I couldn't even get all the way up, halfway up that bar. And if I can't get halfway up a bar, then essentially, you can say it's bullish, but to me, if I came and finished halfway up a bar, I consider that bearish. And we will be live tomorrow for PPI, just like we were live for CPI at 8:30. That's it.